Ladies and gentlemen, welcome back to my YouTube channel and to another episode of Priceaction trading. And before we get started, let's take a look at the daily chart. Alright, so here we are at the daily chart and the prices are continuing in their sell-off. Yesterday we had a little bit of a bullish bar, there was a little bit of uptrend yesterday, but now it looks like we are heading still lower. So I wonder how we can use this information to trade it better on a lower time frame. Let's take a look. So here we are at a more detailed time frame, and this is overall the big picture for the day. We ended up making a nice quick rally up, but the rest of the day it was just some sort of downtrend working lower. Prices are steadily working lower. Now we kind of bottomed out right here. We have this nice support forming, but overall in the big picture, you know, we can call it a range day on a bigger picture. Even though the trend was down majority of the day, we can still call this some sort of trading range day. You know, which is not uncommon. After such a big sell-off that happened in ES, you know, a few days later, we had an uptrend and now we have a little bit of consolidation. You know, this is very, very common because you're not gonna get massive sell-off every day after each other. After a massive sell-off, there is almost always some sort of little bit of consolidation. You know, people are getting used to what's happening. So this is very typical for ES at least. But you know, nothing really matters to us because we are day traders. We are just scalping for 10 ticks. So it doesn't matter whether the prices go up and down. You know, we can make money when the prices is trending higher, and we can make money when the prices are trending lower. So we have the perfect formula for this. We don't really care where the prices go. So this is the great thing about being day trader. You can make money whether the price is going up and down. You know, we don't really have to sweat about anything. But when I came in around, let's take a look where I came in. Somewhere around here. It was 13:30 my time before US Open. Market opens in my 15:30. There was quite some volatility today before the market opened. Oh no, actually it was before there was a time shift. Now that I'm thinking about it, I think market is opening at 14:30 my time now. We got the winter time now. Nevertheless, doesn't matter. I found this trend line working higher, mainly from the highs. And a lot of times I tell you that in the morning session, this is typical for ES, but in the morning session, when you get a break of a trend line in the morning session, a lot of times it will not count and prices will make a second break and then a new retest. So, you know, this is very typical. I mentioned it in, you know, one of my earlier videos when I started this channel. A lot of times in the early morning session, this is typical for ES. The break early, a lot of times don't count. I don't know if it's because, you know, a lot of traders are not even trading yet. So the second wave of traders, when they come in before they open, you know, they don't pay attention to this for whatever reason it is. It happens. So pay attention if you're trading S&P 500 specifically. Pay attention to this, that you can have a break of a trend line. You know, it is not enough still. People will wait for a new retest. And we made a clear new break, and we are attempting to go high, to make a new high. We spike through EMA, we pull back. This is our first entry long from this high, and it's just the first entry short. So you know, this is not higher probability setup for us. We want to wait for the second entry. So we have a correction working lower. You had a nice break and a new low, and you make this higher low with a nice little bullish bar. It is a second entry. It is on the EMA. It is in an uptrend. Plenty of reason to go high. A lot of higher probability setup right here. So this is a good long that I marked. Unfortunately, I missed this. This bar happened so quickly, very quickly. I put my limit order at the close, so I wasn't trying to be that sneaky, but I still missed this. Never mind, you know, it was, and you could see how good of a setup it was. You would have gotten runner if you would have caught this setup, but this was a good setup. Prices made a double top right here, and to be honest, I wasn't really expecting such a big sell-off. I was thinking because majority of time, when you work higher into trading range, you will most likely break out higher. But since we had a massive sell-off the day before yesterday, you know, this is probably what contributed to this rally down now. Because, you know, there is most likely going to be some sort of consolidation, a little bit slower day after my massive sell-off. So prices were trending lower. I wasn't really feeling taking shorts, even though we have a second entry short here. I was still kind of looking for longs because longs are much higher probability at this point. But you know, it is a trading range. We are heading to lower side. We have a break and a new low. This is not a bad setup. if somebody took this, it is a second entry, I wouldn't blame you. Then we made a new low right here. Prices are forming a key support right here. This is a key level that you need to find. And at this point, you know, I'm looking for ways to go long, because now it is clearly a trading range, and the only way you trade the trading range is you sell the highs on your way down and you buy the lows when you're coming on the way up. But there was no really nice setup at the lows, so kind of waited. We spiked through EMA, we pulled back. We have a first entry long from this new high that we made. This is a new swing high that we made. We have a first entry long, pull back, and you get a second entry long right here. This was a good setup. I didn't take it, I waited for this setup actually. This is the setup that I took, and I got filled luckily here. This is a new low that we made, pull back, first entry, second entry. It is a higher low, and EMA is still holding, and you are waiting for a retest of this trend line that is working higher from these lows. And we are coming from the lows, and this is how we trade the trading range. You know, we're most likely heading up here. So I was still thinking we might get to this stop. For some reason it didn't happen, you know, we spiked down quickly big time. And this is, once again, this is, I can actually remember talking about this in my previous videos. A lot of times, you know, the way you know that the downtrend will happen is if this is all that happened, if this all the bulls, you know, managed to do, rally up in the middle of this trading range and instantly, you know, they got slapped, you know, there is no bullish team left. We barely made it to the middle of the range day and we instantly shot lower. This is, you know, price action is telling us that bulls are, you know, throwing the towel, and they are not strong because this is all they managed to do. All these people that are looking to buy the support, because a lot of people are buying the support, they only got few people enough to make it to the middle of the range day, and they instantly sold off on them. So there's, you know, bears, a lot of bears were waiting, you know, to jump on a train quickly. So at this point, when you make it right here, you know, you have to forget about longs, because this is, if this is all that happened, we didn't make it here, you have to forget about longs. You know, bulls are weak at this point. So pay attention to these trading ranges. We were making lower, you had a nice breakout pullback. We break this support, we pull back as the most breakouts fail, at least a little bit, you know, we pull back. This is a breakout pullback. Breakout pullbacks are not that higher probability setups, so I'm not a fan of those. But looking back, it's not a bad setup, but still, this just confirmed the trend line, because you wouldn't know if the trend line was valid here. So I think it's better to wait and let this go. Just wait for higher probability setups. You know me, I like to wait for higher probability setups. So the next bounce of the trend line and of the EMA is right here. It is just a first entry, but it is of the trend line, and the trend line is clearly 1, 2, 3 swings, almost 4th swing, and this is the 5th touch that we have from the trend line. It is from the EMA and a nice bearish reversal bar. You have to take this trade. You cannot argue with the downtrend now. It's giving you a chance to go short. And now you got much safer entry. You got a correction working higher, a little bit of break, new high. You know, this is the rule of the trend line. After a break of a trend line, there's most likely going to be a new retest. You have a second entry because market moves in twos, two-legged pullback to the EMA. It is off the EMA, it is a second entry short because we broke below this bar. Then it failed because we went higher and we ticked above this first entry short. So first entry short failed, but a second entry appeared after we broke below this bearish bar. So second entry triggered right here. You're waiting for a break and a new low. You're in a downtrend now, and you're probably heading to find this key level. This is important key point. You're heading to find this key level. And you can see later on we went there and find it, and you can see the level we're holding. And so I think this was a good trade. You make a multiple X to a new low. I actually like this trade. Looking at this, even though you made a new low, it is a second entry of the EMA, but this signal bar really sold me on this trade. You know, normally I wouldn't mark it because you already made a new low. But such a nice, it is a two-legged pullback to the EMA, and you know, you get a lot of people still trying to pick bottoms. A lot of people, you know, they still want to go long way too early. You have to wait for, you know, the higher lows more preferably, you know, if you want to pick bottoms. So this is such a big bearish reversal bar. Look at this bar, how big it is. Look at the nice reversal bar. This is ideal signal bar. So this is definitely, it is a second entry of the EMA. So this is still good enough for a quick scalp, and this is all we care about mainly, just the scalp. So we can afford to take a little bit riskier trades. And then prices bottomed out right here, and we made a first spike through the EMA, and this is the usual first sign of a reversal pattern. But you don't want to go long just on the first sign of a reversal pattern. Look at how prices spike through EMA. Yes, it is very bullish activity. This is what EMA kind of helps us to recognize the reversal pattern, because we spike through it like it's not even there. You can see that we didn't really spike through it here. We made it here, and then we chopped along this side because EMA is still holding. A lot of people are still selling here, but here there's no people selling here. We chopped through it, but still it's way too early to go long here, because this is just a first sign after such a big sell-off, and you never know if it's gonna make another leg down. As you can see, it actually made another leg down. So you wanna wait for this consolidation to play off, sit on the sidelines here, be patient, wait for higher probability setups. We made a new low, and the support didn't let the prices to go lower. We instantly reversed out of here very quickly. A lot of bulls were buying here, a lot of people were buying here, probably blindly. They had their buy stops, buy limit orders right here, and we spiked through this very quickly. And look at it, we once again spiked through EMA like it's not even there. Big bars going higher. So this is repeat pattern of this reversal pattern, but this time this is a second attempt, and this is more valid attempt. So I took this long. This is a new high here, pullback, first entry, pullback, second entry, and the EMA is holding. Nice reversal pattern, and you pull back through EMA. EMA is serving like a stepping point. This was a trade that I took. So at this point, I'm gonna tell you something funny, because I went long here and I got trapped, because at this point I was 1, 2, 3, and I actually took this trade. So I was 4-0 at this point. And for some reason I got I kind of got a little bit into my head that I was actually trying to sneak in on this trade, and I was still hoping, yeah, maybe I can get a little bit more scalp, we can continue to go higher. But looking back, look, we have a correction working higher. Let me mark this. We have a correction working higher, we have a break, this is the proper place to go long, and we have a new high. But we have a second entry long here, but we are far away from EMA here, not that far, but we are not even to EMA here, and we already made a new high here. And now you can see that this is starting to look choppy, like a trading range, and this is what happens. This was a self-sabotaging belief. Let me talk about this for a moment. Pay attention here, because I was 4-0 for the day, and you know what everybody is telling you. Everybody keeps telling you market is random, you cannot do this, you cannot be profitable, you cannot have such a win percentage. So I was kind of, it will get into your head, and these beliefs are only, you only have to combat these beliefs once you become successful. Because a lot of you watching right now, you're probably in a learning stage, but once you actually learn to read the chart, which is not that hard, a lot of you can get there in a few years, because if you wait for proper setups, higher probability setups at key entry point, you can learn this. But once you actually start to get profitable, and this will be your job, you will be, out of nowhere, you will be reliant on this job. You have to make consistent income from this job. So there will be another set of beliefs that will come into play, and they will come to, harm your trading. So, and Mark Douglas called this self-sabotaging beliefs, and this is exactly what happened right here. I was 4-0. I thought I'm on the cloud 9. I thought I'm invincible because I was 4-0. I had such a great day, and I completely, I was brain freeze, and I took a chance here. And don't mistake me, because I'm not too worried about this, because it's still 4-1 is still a great day for me. But just to let you know that after you become successful at this, there will be another set of beliefs that will come into play. And the bad thing about this, that you cannot really prepare to fight those beliefs, those negative self-sabotaging beliefs, because you only get to experience those beliefs once you are actually successful, or once you are making consistent income. So definitely this will happen. It will happen. A lot of people that I was training, once they become successful, they will start making stupid errors, and these errors are almost unexplainable. Like, why do we do this? But just don't panic when this happens, and pay attention, because this is normal, what's probably gonna happen. But you know, it is a good problem to have. You actually want to have this problem, because at that point you're consistently profitable. But let's go back to making sense of this chart. So right now we are kind of chopping lower high, up and down. So I actually like this trade, because we have this trend working higher, correction, and a new high. It is a trading range forming right now. So a lot of people right now went long on this big bullish reversal bar, because they want to go long way too late into the forming resistance. I may actually mark it here so you can see it a little bit better. You can see that there are some tops here forming nicely, and they went long into this they went long here right late, and once we, you know, reverse on them like this, I like this trade for, you know, quick scalp, quick trap. So hopefully this makes sense. And after this point, you know, I was really not focused at this point. Anything can happen at this point, you know. Looks like the resistance have moved a little bit higher at this point. You can see there's some tops here. We made a top here, and anything can happen. It can go up, it can go down. So I really think you want to wait through this consolidation. Prices really don't know what's gonna happen. A lot of traders don't know what's gonna happen here. Even though we are scalpers and we are good, you know, in taking our small profits, you know, don't take a chance at this. Wait for prices to get to key entry points, to key levels like here. This is the safest place you want to trade. And, you know, I wouldn't blame you even if you just, after this break and a new low, if you sit on the sidelines. If you're a beginner trader, definitely don't trade these consolidations. It is hard for people to trade. But then you get a nice reversal pattern like here. Unfortunately, I don't have a good setup. I have a gigantic bar to go long here. If you had better bar, this is definitely a good long to consider right here, because you have a break of this correction and a, let's take a look, and a 2 legs to a new low. Leg is right something like here, and here 2 legs to a new low. So this is a good, if you had a better setup right here, you could have went long. But notice how you have these first few swings, you draw the trend line just in case something happens, and you get a nice big bullish bar right here. But the bar is too big. It's not a terrible setup, definitely, by no means. But, you know, when the prices broke lower and then instantly reversed higher, now you can clearly see the EMA pointing higher and EMA is holding. They went lower, prices sold lower, touched the EMA, and instantly reversed. And this is why we use the EMA. Definitely, because I got some newer people watching. If you're newer people, definitely use this EMA. It is a 21 bar EMA, and I made a video about how we use it. So, and you know, we are price action readers, make no mistake about it, but we use this EMA just a tool to help us. We don't rely on this, but it is a great tool to help us. Prices bounce off the trend line, and it is a form of second entry. It is technically first entry only, but there are two legs. There are two legs. On a smaller time frame, it will be much more visible. So this is a good reversal from these lows, and you can see how quickly we spiked higher. This is a big move. This is similar to this move. Look at the big bullish bar, like it's EMA, it's not even there, and we pull back on the EMA. Same thing here, like the EMA is not even there, big bullish bar, and we pull back on the EMA, and at this point on the trend line. We made a break, new high. You know me, I wasn't trading at this point, it's too late for me, but I marked this second entry short, because prices spiked through EMA, they got back into this range, and you can see the trend line, and prices confirm the trend line right here. This is the third touch from the trend line, from the resistance. We're back into the resistance. Once again, we touch the EMA. Once again, EMA is perfect right here. Bounce from the EMA, from the resistance, from the trend line. It is a, look at this new low right here. This low is lower than this low. This was the low previously, and this one is a newer low. So the count starts over from this low, pull back. First entry by the bears to go short, first attempt by the bears to go short. Another attempt goes higher, and second attempt by the bears to go short. After we break below this bar, we take one tick below this bar. So second entry short at the key entry point. Good trade. And you know, there are trades forming, you know, even till we're heading to the close, but I'm not gonna mark it. There's a lot of trades today. I could be marking this forever, and I just want to say we get a lot of new people, so you might be saying, yeah, this is all hindsight, you know, hindsight is 2020, but you can check my live videos. You can actually do this real time, and first you need to analyze it after the fact so you can see it, you know, printing real time. So, you know, just check the live videos and you can see that I'm trading the same way that I'm showing you guys here how to trade. So this was the final, I can make it even bigger. This was the final look for the day. Big range day. Majority of the day there was a sell-off. From this point we had a sell-off, and yeah, it is Friday, so you don't want to trade too late when you're close to market closing, and definitely on Fridays. You know, on Fridays you definitely want to be out as quickly as possible, because you might get stuck and broker will kick you out most likely. So don't risk it. Make your money early, and you don't have a chance to make it back. If you have a mistake before the close, you don't have a lot of time to make it back. If you make a mistake during the early morning, you have a lot of time to make it back. So anyways, once again I hope this video, you know, improved your trading. It was helpful, and I wish you a safe weekend, you know, during this crazy times that are happening in the world, this sickness. But anyway, see you soon guys. Bye guys.